Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, brought to you in association with Bank of New Zealand. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news. The New Zealand dollar is opening this morning at 81.6 US cents. That's just below 82 cents. That's our post-float high hit in March 2008. However, it hit 81.96 on Friday afternoon, but was knocked back a bit by Moodys' announcement that it had downgraded New Zealand's big four banks because a weak economy increases the risk of some bad loans, and also the big four banks rely on the hot international money markets for much of their funding. This downgrade in the credit rating cements in higher borrowing costs for the banks and means that the margin between the official cash rate and mortgage rates are likely to stay high. Also, term deposit rates likely to stay relatively higher than the official cash rate than they had been before the global financial crisis. Meanwhile, markets, however, have increased their outlook for interest rates over the next year or so. The markets now see 60 basis points of hikes in the official cash rate in the next year. At the beginning of last week, it was at 50 basis points. An ASB survey, though, of housing confidence has found that a net 35% of home buyers see higher interest rates over the next year. In fact, there's still 46% who see higher rates. The net number is 35%, which means 11% actually see lower rates. 11% also see house price rises. The ASB itself sees a 3% rise in house prices. Meanwhile, overseas, Fitch has cut Japan's credit rating outlook. The IMF also sees Greece unable to meet its fiscal targets and it may withhold a tranche of funds. And in the United States, there was weak economic data on Friday night. April spending was below forecasts and existing home sales down 11% when just a 1% fall was expected. I'm Bernard Hickey. That was 90 at 9, brought to you in association with Bank of New Zealand.